These are XABCD patterns. In this video, I'm going to take a high-level overview of why I trade these patterns.
Okay, first of all, thank you. Wow, last time you guys absolutely smashed that like button. Let's see if we make lightning strike twice. Every single like and comment really does matter, so let's spread the word.
So the first reason is the precision in how I do my market analysis. I do it the exact same way every single time. I wait for these patterns to come up, or I could use my drawing tools, but I prefer the automated way of scanning them. Saves me a lot of time. But the way I do things every single time is exactly the same. And that way you can use these patterns to reduce a lot of guesswork in any sort of market predictions that you're doing. So if you want to see a video on how to trade these patterns in under 2 minutes, it does not take long to learn a simple strategy. Watch this video here and I will show you exactly that. So reason number 2 I trade these patterns is because I want to take objective trading decisions, meaning I don't care if this pattern wins or loses because I'm trading an overall system. Okay, so I'm looking for patterns that are not necessarily going to work out individually, but collectively as a whole. It would drive me absolutely insane if I had to hope and wish that this one particular pattern would work out. Look, in this case, we are looking for a reversal here. We are looking for this to dive down. This one moved a lot further than what I would have expected, but it's a consistent approach every single time with those non-objective trading decisions where you don't care about the outcome of any particular trade. It's more about how you trade the whole entire system. That is refreshing. So another reason why I love these patterns is because we get to identify key market turning points. Even if you don't trade it daily, I know a lot of people don't, some people do, but a lot of people don't, you can use these higher time frames to look for key market turning points. So you can look for a big turning point, then start looking at your smaller time frames for those bigger moves down, right? We have a nice little pattern that lines up here with previous area resistance. So looking for key market turning points with these patterns is another great reason to be using them. Another great reason why I love these patterns is because they do work across all time frames and charting styles. So it doesn't matter if you trade a Renko chart or a point and figure chart, or if you look at something like a candlestick chart. It doesn't matter if you trade a 10-second chart, a 50-tick chart, a 5-minute chart, a 15, a 60. You get the idea. Daily, we have people that trade these on weeklies even. It doesn't matter because you're mapping out human emotion that's going to be based on that chart style, and it all works the same way. The other reason why I love these patterns is because we can combine price, time, and basically geometry. So our price is measuring from X to A, for instance, and how much of a retracement our B point would be. But we also measure the time. So how long does it take to form from X to A? And how long does it take from form to A to B, and B to C, and C to D? How long does this pattern take? And that's why we have these green, yellow, and red zones. Shows you where your probability ends and where your cutoff is. There's a lot of things that you can do with time and price and essentially geometry of patterns all together. Another reason, clear entry and exit points. So for instance, and this is kind of going to the video that we talked about. If you haven't watched it yet, you'll want to watch this one, but here it is, okay? Our entry area is going to be in this highs and lows. Now we also know it can be in the green area or the yellow. It can't be in the red. Watch this video on the red zone too. Now you have your entry point. You have your targets down here, which are all defined for you. You can even use ratios, which I'd highly recommend looking into. Your stops, well, if this is your entry point up here, you wouldn't want it to go past that. So anything above it is valid for a stop. You can have a 2-to-1 risk versus reward, or higher even if you wanted to. And you can actually figure out that, well, in order to make this work, you would have to be right 33% of the time to break even if you were looking at a trade that you're going to be winning twice as much as what you're risking. So if you have a 2-to-1 and you are right 33% of the time, you're basically at break even. This lowers the bar for a lot of people who might have to aim for 65%, 75% just to break even. This makes that a lot easier. Now, another reason why I love these patterns is it does minimize over trading, okay? Because you have a market analyzer set up. It does alert you to when the patterns are found. You don't need to be doing anything in between then. You're just waiting for that alert to trigger so that you know that you have to go analyze that pattern. Say no, and if you can't talk yourself out of a trade, maybe that should be the one that you're in. And having the scanner working for you, doing all that legwork is definitely a good way to minimize that over trading. Now, Another special thing about these patterns is that it will integrate well with other indicators. For example, maybe you're looking at RSI value when you're in that reversal zone and you're looking at that shorting. So if RSI is above 70, then this is something that you're going to start shorting. Like, you can integrate almost any strategy. I haven't come across one that I wasn't able to yet when we put together execution plans with people, but it can be integrated with everything that you do. It's also going to help you improve your trading consistency. We touched on this a little bit ago, but if you're looking for the same set of emotions every single time and you're trading in the exact same way with the exact same cutoffs, with the exact same risk versus reward, you better believe your trading is going to become a lot more consistent. Now, you'll learn a lot more about this later, but markets can be in ranges or it can be in trends. These patterns will work in both. So just to give you an idea, I'm going to take out my drawing tool here so you can see it a little bit easier. But if you had a pattern that looked like this, which is an RTP1 pattern, then you're looking at price or wanting to see at least price heading down. So you would be in basically a channel and you would be using this reversal area as a key to get in and follow that channel as price drifts lower. Okay, so an RTP1 pattern is going to be best used in a channel. Now you can also have something called an RTP2 pattern, and that is going to look like this. Now an RTP2 pattern, very characteristic of it, is it's going to look like a double bottom, which means it would be best if you were inside of a range. Okay, then you're looking for price to bounce off of it. So these patterns can be used both in trending and ranging markets. Just depends on the pattern that you're using, and we'll get into that a lot more, but it's going to be pretty easy to understand, as you can see. So back in the day, you used to have to care about these little tiny fib numbers that you see here. These fib numbers you hardly use anymore because as soon as a pattern is valid, I'll show you here, it's going to change from a gray, you see this has no pattern, to a pattern and it's colored. So it's very easy for you to see the pattern and to know if it's valid. You don't even have to look at the numbers anymore. It makes it very simple in order to identify the patterns, and that makes it a lot less prone to human error. Now, patterns like this can also teach a lot of discipline. Okay, so for example, let's just say you were looking at trading these in channels again. You're only looking for patterns that are going to line up with that channel that you can then go long. Okay, it teaches a lot of discipline because you know you can't do anything else except for trade that pattern if we get a pattern that lines up with that area of support or resistance, if that's how you're going about using your patterns. So it does teach you a lot of discipline. You'll know exactly when you're doing something right and when you're doing something wrong, because it's very easy to map out rules that are black and white and not gray. Okay, so that's one of the benefits of using the patterns. Another reason why we love this software and using patterns like this is because what used to be a more advanced thing to do because of the calculations of all the ratios and everything like that has now actually been something that a lot of beginner traders more so are picking up now as a way to build that consistency and get going early. This is something that can definitely benefit all sorts of people. So you heard me talk a lot about confidence, but this is also something that's going to help you boost your confidence in your own trades that you're taking. So for example, I mean, traders that are used to something that might be more grayish, like volume interpretation or Elliott wave stuff, where everyone might view a chart slightly different. There's no way to do that with this. Everything is exactly by the numbers. Everything is black and white. You can have a whole lot more confidence in what you're doing and not the second guessing. Okay, so we talked a lot about the good and the positive, right? Now let's talk about something that people don't like to talk about, losses. Everybody is going to take a loss, but it's very convenient when your losses are kept small. So you put a stop on the other side of the reversal area. Maybe your entry point is going to be within that reversal area and your first target is going to be at your 2-to-1. So you're looking at a trade that you're going to make twice as much as what you're risking. Your loss is going to be pretty small. There's not going to be a whole lot of I mean, as long as you're risking things correctly, percentage wise, it's not like you're going to be moving a stop and that one trade's going to turn into a bigger thing. You know exactly when to cut this off. And if you know when to cut that off, your risk is going to be a lot smaller than what your reward is. So obviously you're limiting your losses that way. And that's something that we do like, is to have smaller losses, admit when we're wrong early so they don't turn into bigger ones. Okay, well, we just crushed a whole bunch of reasons of why we like trading these patterns, specifically XABCD patterns that use both price and time, giving you that advantage of knowing when your probability dies out and keeping you a lot more consistent is going to be huge. So if you have any questions, put them in the questions box below. I will definitely get back to each and every one of you. And of course, like, share, and subscribe. Of course, that will help a ton. And it will also show other people that might be interested in this video a chance to see it and show them why we are all trading XABC patterns.